Hello everyone and welcome to Living Finance. Today we'll be discussing the topic on how you can arbitrage or have an indirect exposure to the crypto market or crypto assets without actually buying or owning a single crypto. There are several ways in which you can have a diversified portfolio if you're hungry to add one or two crypto related assets to your portfolio. There are ways you can do this without directly buying a crypto or any crypto related project, but you have an indirect exposure to crypto assets. To get or have a full understanding of this topic, I would suggest you listen to the previous two topics on this subject, titled How to Trade Crypto Part 1 and How to Trade Crypto Part 2 of 2. That will give you the foundational knowledge and you can build on that to understand this topic better. So let's dive into it. There are three ways you can have indirect exposure to crypto related asset or crypto market without actually buying a crypto. And I'm going to lay down those ways or those approach in this episode. Starting from number one is buying crypto mining companies. These are companies that mine cryptos, right? So they make profits based on the quantity of cryptos they've mined and based on the underlying asset value of the crypto project they have mined. I'm hesitant to use the word cryptocurrency because is crypto really a currency, a fiat currency? No, it's not. But to have a full understanding of what a currency is, please listen to our video on Bitcoin and the fundamentals of the crypto asset. Go through our channel and pick up Bitcoin, the video on Bitcoin, so you can understand, what a currency is and the underlying fundamentals or definitions of currencies vis-a-vis cryptocurrencies, so to speak. Now, you can have this indirect exposure by investing or buying crypto mining companies. And how can you buy those crypto mining companies? You have to look at the companies listed on the stock exchange. So you have to have a trading account, one, either with Robinhood, Webull, Public, any of those trading platforms. Remember, this is not a buy recommendation, and any project mentioned here, any company mentioned here is not a buy recommendation. Okay? Do not take any information presented here as a buy recommendation. This is just for informational purposes, for educational purposes only. It's not a recommendation, a buy recommendation of any project mentioned here. Before you make any financial or investment decision, please consult your licensed financial advisor to do so. We do not recommend a buy position on any or in any asset mentioned here or platforms mentioned here. So you can have an account with any of the trading platforms. And when you do that, that is the first step. You begin to ask or research on the project or the companies that are exposed directly or indirectly to crypto mining, right? So this means that the companies make money by mining Bitcoin, Ethereum, or whatever those cryptocurrencies or crypto projects are, right? And you have to understand that the appreciation of the stock value is driven by the appreciation of those or cryptocurrencies. The appreciation of the real value of those companies listed on the floor of the exchange that trade on crypto is driven by the inherent value of the asset they are invested or mined, right? So taking into consideration, remember when Bitcoin shot to $65,000 per Bitcoin, right? Most of the mining companies that had direct exposure or indirect exposure to Bitcoin are appreciated in value. I will give you two. You can make your research on these, right? Riot Blockchain and Marathon Digital. Their price, they went from literally nothing to about $40, $50 a share. Now, Marathon and Riot have direct or indirect exposure to Bitcoin. They mine Bitcoin. So it means the more Bitcoin they mine, the more price appreciation or the more money they made because the price of Bitcoin and other crypto related projects were shooting up at the time or shot up at the time. But what happened after Bitcoin fell? Their prices also fell. You can go online, check the price of Marathon Digital and the price of Riot Blockchain. Some people argue that these companies still have what? Value in them because of their indirect or direct exposure to crypto mining. And if you take a position or the view that crypto's assets or Bitcoin would recover, right? Then crypto mining companies become attractive to buy at the price range they are today. But again, you have to understand the inherent risk that any crypto or crypto-related project can go to zero. If they go to zero, you're a loser. If they win and the prices shut up and you get in at this low price, then you're a winner, right? Now, you would have indirect exposure to crypto projects without having a direct exposure to any of them. It means you haven't bought crypto, you haven't bought Bitcoin, you haven't bought any of those crypto projects, but you are indirectly invested in it because you've invested or bought shares in companies that have direct or indirect exposures to them. So the price of those companies will appreciate as soon as those projects as well, or the currencies, or so to speak, the crypto projects appreciate in the market space. It's a game of time, waiting, fundamentals, but you have to understand that it can go to zero and you can be a winner. There was a time Marathon Digital shot up to $80 a share from literally nothing. When Bitcoin was raging, when Tesla bought into it, the price shot up. And companies that were mining big cryptos and Bitcoin especially made a ton of money. Again, all companies listed on the stock exchange must abide by the regulatory approach to disclosure requirements. It means they must open their books, they must audit their books, and they must inform the public about the health of their corporation, unlike cryptos or crypto projects that are unregulated. So you don't know what's happening. There could be what? An insider-related transaction. Just look at what is happening with FTS right now. They are filing for bankruptcy according to the allegation that the company, is out of cash. But when you are invested in a company that is exposed to crypto or has indirect exposure to the crypto market, but listed on the stock exchange, those companies would have to open up their books, declare results, dividends, or let the investing public know if there is any price-sensitive information that may affect the value of their stock. So while crypto is unregulated, buying a listed crypto company from the stock exchange gives you a leeway to be invested in companies that are regulated. There are a few of these companies that are involved in bit mining or Bitcoin or crypto mining that are listed on the stock exchange. But again, you have to do your due diligence before you dive into it. So if you're one of those centrist people who believe crypto projects may take off, they may become regulated, there may be greater transparency or self-regulation. As a result, you're centrist. You're looking whether to go in and waiting to get in at the right time, right? Or you're one of those people who believe it's worth nothing. It won't be adopted and it's going to go to zero. But you want to have an indirect exposure to the market, right? Waiting and playing the waiting game. Then investing or buying into some of the companies that have indirect or mining exposure to the currencies or the projects may be a leeway. Remember, it's not an investment advice, right? This is just educational purposes. Now, we are going to list some of these companies that are invested or have direct or indirect exposure mining cryptocurrencies that are listed on the stock exchange. Again, it's important to know that the mention of any company here is not a buy recommendation. Do not rely on it to make any investment or financial decision. Consult a licensed financial advisor before doing so. The few companies that are exposed to crypto mining companies that are listed on the stock exchange may give you that indirect exposure. And here are some of them. Marathon Digital, Riot Blockchain, IBAN, Canon, Bit Digital, Hive Technologies, BTCS, Bitfarms, Hunt 8 Mining, and Cryptide, and also Cause Mining. Okay, but there's information out there that Cause Mining has financial difficulties. They may restructure or they are selling off some of their assets in order to stay above waters. So do your due diligence before you invest in any of these stocks. Okay? It's not a buy recommendation, it's not an investment advice, but like we said, we're going to give it three areas: a tripod strategy to have indirect exposure to crypto assets or crypto markets without having a direct exposure to them. But you have to also understand that having an indirect exposure to crypto markets or crypto asset, the appreciation of your investment is inherently linked to the cryptos or to the crypto market. 1, 2, the management of the companies you're invested in, right? And 3, your investment objectives. So you have to consider your risk profile, your investment objectives. Are you a short-termist, a long-termist, medium-term? Do you have the patience to wait? Right? So take these things into consideration before you get into it. But having an indirect exposure through companies that are listed is one way. And the second approach is what we are going to discuss now. Like we said, 3 approaches, 3 ways to do it. One is having indirect exposure by buying stocks that are listed on the stock exchange that have direct or indirect exposure, mining cryptocurrencies or invested in cryptocurrencies. Now let's talk about step 2. The second way is to invest, or the second approach is to invest in ETFs that have indirect or direct exposure to crypto markets. Now, ETF means exchange traded fund. There are a few of them that have direct exposure or indirect exposure to the crypto market. So, first, you have to read the prospectus of the ETF. Understand the companies the ETF have in the collection of their as a collection, right? What companies are they exposed to? So you may find one ETF that have 10 companies, 5 companies, whatever companies, maybe small cap, medium cap, or large cap crypto companies in their portfolio. So it means when you buy into that ETF, you're indirectly buying a collection of assets that have that exposure. So I'm going to mention a few of the companies or a few of the ETFs that you can find in some of these trading platforms. But you have to also understand that there are cost implications to invest in the ETF. The managers, there's management fee, right? So they don't work for free. In a nutshell, ETF has in its collection multiple assets under one management. They may have 5 companies, but they are trading the ETF. And that ETF is exposed to the value appreciation, depreciation, or the inherent value or performance of the companies in their collection. Read the prospectus to see the companies the ETF you want to invest in are exposed to. Having said that, now let me list some of the ETF you can find in some of the trading platforms. Remember, it's not a buy recommendation. Do not make any financial investment decision based on the mention of these names. We do not recommend or make any buy recommendation in our programs. Please take notes. Now let's list some of the ETFs, exchange traded fund, that have indirect exposure to the crypto industry or crypto market. Number 1, now the list in the order mentioned does not represent the value or the performance of the companies or the ETFs, and it's not a buy recommendation. 1. Schwab Crypto Thematic ETF. 2. Bitwise Crypto Industry Innovators ETF. 3. Invesco Alerian Galaxy Crypto Economy ETF. 4. Volt Crypto Industry Revolution and Tech ETF. 5. First Trust Skybridge Crypto Industry and Digital Economy. 6. Fidelity Covington Trust Fidelity Crypto Industry and Digital Payment ETF. These are some of the ETFs that have direct or indirect exposure to the crypto markets. It means they have in their collection a list of companies that have direct or indirect exposure in crypto industry. So when you buy one of these ETF, you're indirectly invested in multiple companies that have direct or indirect exposure to these companies. Right? Remember, it's not a buy recommendation. But it's worth noting that, the crypto market is evolving. Right? Regulation may help or kill it. Let's know what you think about regulating the crypto industry. And number 3 in the list of the tripod is to understand how to mine these cryptos yourself. What equipment do you need? How can you mine cryptos as an independent person without being exposed to it directly but indirectly? It means you make money by mining cryptos. It means you have the equipment to buy the equipment and you see how you can, work with the crypto mining technology to mine cryptos and make money. There are information I read online, unverified, that some people in some countries around the world are mining cryptos, especially in upcoming economies that have stable power supply. Okay, and they make money out of it. So crypto mining, independent crypto mining, it's also another way to be indirectly exposed to crypto, right? Without actually investing your money in any crypto asset. It means you make money when you mine cryptos. You have to study it to understand the market. The equipment, the financial exposure now becomes a risk. If you have money to get invested in that area, it's something to look into. But again, it's not guaranteed. Like in every investment, the potential of loss or for loss is there. So you have to take into consideration that it can go to zero. It can be scrapped in your country. Mining can be scrapped in your country and it becomes a financial loss to you as a result of the power consumption. But if you can afford to carry out a research on the mining aspect of cryptos and how you can make money mining crypto wherever your location is, and what the cost implications are, the equipment, the regulatory challenges and what have you, and how you can navigate that, that's another way you can be invested in crypto indirectly without being directly invested in crypto. So think about this. Lastly, you also can buy stocks of companies that trade cryptos. For example, Coinbase trade cryptos. So it means the price of Coinbase appreciates when crypto does well, right? Or if crypto assets do well, but also depreciates when crypto assets are not doing well. But you have to take into consideration the inherent risk investing in these companies. Because if crypto tomorrow becomes, expunged, for the lack of a better word, or banned in America or other nations, the companies that are exposed to them directly would have nothing to trade and you can lose your money. So, let us know what you think. Subscribe, please, like, share, and comment, okay? Let's know the next topic you would like us to discuss. I would want to discuss in the next episode how diasporans can arbitrage the rise of dollar and the fall of major currencies. If you like that topic, stay tuned. Thank you for listening. Thank you all for listening today. Remember, the information provided in this broadcast is not an investment advice. Please do not rely on it to make any investment or financial decision. Consult a licensed financial advisor before making a financial decision. Thank you for listening.